Hi friends, welcome to my channel. In this channel, I talk about uh, money, and then about growing that or increasing our income. And the third aspect is about your mind. How does you thoughts and processes and positive thinking of your mindset. So in this particular video, I'm talking about in continuation to the stock markets, whatever I felt, whatever I could gather from my um, so many years of experience in banking of 20 years, and the few things which I can start with is the index fund, which I spoke about in earlier videos. In continuation, so how do I identify an index fund is what is today's topic. So basically, as I said, index fund is a type of mutual funds. Unlike the old traditional mutual funds, it is a manager or the fund manager collects baskets of things and then they work on it. Index funds is a replica of the stock markets, Nifty 50 and BSE and things like that. So that is more closer to the stock market per se, which I personally love it. And there's been a various debate on Warren Buffett also, what do you say, banging on it. But yes, that's the best way to start with it. So how do I identify a few things? In everything there are only few things matters. So one says low expense ratio. Expense ratio is an annual fee charged by the fund manager for managing the fund. This can have a significant impact on your returns. Mind it. Look for index funds with lower expense ratio, as this can help your keep your cost down and maximize your returns. Now that is one. Second, everybody speaks about, diversify. So diversify is an essential way of investment. Good index fund should provide exposure to broad range of stock and securities. Look for index funds that track well diversified index. So there has to be a diversification, not in one sector they have put in and things like that. So that is one. Then tracking error. So tracking error is a difference between performance of the index and the funds performance of the index and the fund's performance. Basically, the good index fund should have a low tracking error, which means it closely tracks the index it is designed to follow. There are lots of sites you can just put in any of the index fund and says what is the tracking error. It will give you the details. Fund size, how big is the size? Yeah. Then historical performance. So those points, very few points. Just take it up and then begin. The idea here is to begin with it. Now, so overall, it is important to research before investing. And if you feel you're doing a very big amount and things like that, have a consultant, just to get a perspective of it, things like that. Now, what are the popular, what I've just started, and what are the popular index funds which is going around? Check, but I just failed to mention few. HDFC Index Fund, Nifty 50 Plan, ICICI Prudential Nifty Index Fund, SBI Nifty Index Fund, UTI Nifty Index Fund, Aditya Birla Sun Life Index Fund. So those are the few which have been running top and things like that. So when I'm talking about the one point I was referring as the expense ratio. So in the same series, HDFC is 0.10% of annual fees. ICICI is same. SBI is also same. UTI is also same. Only Aditya Birla is 0.20, the expense ratio. And how about the returns? So we are all working to get the returns. Why we are saying FDs and things? All days it was FDs and things like that. Why this is more everybody is banging on, and especially Warren Buffett. HDFC mutual funds, generally the analyzed return for the last 5 years is 15.3%. Did you hear it? 15.3%, 5 years. You need to have a long-term plan. ICICI 15.4 annual returns. SBI 15.3, UTI 15.3, Aditya Birla 15.4. So can you just see average is 15? The advisors or the whatever I've heard about it, and they speak about expect anything 12 to 15, and for a long term, keep it for 5 years. Start, my dear friends, start. So it's important to note that returns of index depends on various factors, but find out your goals, align it with your goals. What is your risk and investment horizon? So I have told you can start with 500 and 1000 and things like that. Long term, for yourself, for your beginners, for any beginners. You can have it for your house. When do I want to purchase a house? Sample calculators, you will get it in Google and things. Invest, start. Then you have a car, somebody wants to buy a car, somebody wants to buy a home, somebody wants to get married and doing a vacation trip and things like that. So you plan. And most important, everybody, kids, so you can just plan for them also. Leave it and forget it. So just start. And if you're planning for bigger amounts and things like that, I would then recommend to have a consultant to just to get a perspective of it. But end of the decision, it's your decision. But start. So, my dear friends, let me know about how you felt about this and what you would like to know. Subscribe to my channel and hit a like button. I mean, I will like, and YouTube algorithm, everybody will like it, which will help me. So, thank you very much and all the best.